Queensland rents are set to soar as homes become harder to find. I'm sure you guys are aware that the last 12 months property prices have increased and now we're starting to see rental prices catch up. I don't think this is just a Queensland issue. I think rental prices are going to be increasing across Australia as a whole, as the entire Australian property market has seen growth over the last 12 months. We're going to dive into an article today and break down exactly what's happening in the rental market and share some of my thoughts and experiences as being a renter. The Sunshine Coast had Queensland's largest year-on-year increase in weekly rents, up 18.8%. So that means when you were paying roughly $400 per week, you'd be paying now $500 per week. Tenants have been slugged with the biggest rent rise, 18.8% in Queensland's hottest region, at a time when new listings are at their lowest level since April 2010. The REA Group's quarterly PropTrack rental report, January 2022, out Wednesday, found rents were up 4.7% nationally, while new listings fell 27.2%, the biggest drop in almost 12 years. PropTrack found that the Sunshine Coast had Queensland's largest year-on-year increase in weekly rents, up 18.8%, which almost matched by its year-on-year increases in total rental listings, up 19.1%. The Gold Coast was also in the national top 10 for rental increases, rising 17% in 12 months. Now, I've definitely heard of rental price increases which have been higher than this. I had a chat with a friend and a couple who were renting for roughly around $600 a week, and given the price growth that the property market has had, the landlord decided to bump the rents up to $1,000 per week. Now, this individual decided that he and his partner didn't want to move, and the reason being, if you're set in a location, you've made it your home, and you want to live there for the long term, then you're going to pay the rental increase no matter what. Now, I don't think that was very kind of the landlord, even if that was a market rental increase. I think to stagger that price increase over time would have been a kinder thing to do, but it's not always the way people operate. It'll be interesting to see if this ripple effect takes place and it pushes families further away from the CBD and into more regional locations as well. The rapid growth in rental prices in most parts of the country indicates demand for rental accommodation is outstripping supply, which is a common theme throughout most of the metrics analysed in this report. According to the PropTrack Economic Research Director Cameron Cusher, and he expected the situation to tighten further as borders reopened, with Brisbane already hitting record lows for the time it takes to rent out a property at just 17 days now, down from 19 a year ago. Now, what this really means is it's just a reflection of the level of supply that's on market at the moment in the property sector. With less than 25% of listings, we're seeing a reduced amount of supply on the market. Mums and dads who own their own home are deciding not to sell in the market that we're in. It makes sense given the lockdowns that we've had and the restrictions of movement and the uncertainty in the property market. So what that means is less supply on the market, which is still with a similar level or if not higher level of demand for property, and therefore this has driven up property prices, and it's also driving up demand for rental properties. The issue is, with less investors in the market, that means there's going to be less rental properties available for rent. With international borders reopening, it's likely that the coming months will see the excess rental stock in the inner city areas reduce as migrants come back and occupy those properties. The reopened borders could provide further challenges as the return of travellers both domestically and internationally sees landlords contemplate moving their rental properties from long-term leases to short-term letting. What this is saying here is that landlords that own, say, apartments or houses in that inner CBD location were usually doing short-term rental or Airbnb style accommodation to try and get a higher gross rental yield. And as we look to open up the borders, both through interstate migration and the international borders, we expect to see those investors who own those properties in CBD locations to switch back from the long-term style rentals, which gave them more secure income during the pandemic, and move towards those higher income opportunities in short-term rentals and Airbnbs. It'll be interesting to see how this plays out, as the people have talked about the CBD being vacant during the pandemic, so to see if there's more occupancy in the CBD and a push for more short-term rentals will be interesting to see over the next few months. Without an influx in new rental supply, it seems likely that we will continue to see properties being snapped up quickly. The ongoing tight rental conditions are also expected to result in further increases in rental rates. In regional areas, we may start to see some pressure ease as people make the shift back to the city or they purchase homes locally, having rented for a while after deciding to stay. He expected the strong investment conditions to add to rental supply, though it could take all year to work its way through the system. With more investors purchasing properties, this will in turn add to the rental supply and hopefully ease some of the surging rental prices. Now, what they're saying in this article is they're expecting there to be more rental supply as investors continue to purchase stock in 2022. We'll have to see if that actually eventuates and investors dive into the market, but that would definitely help reduce the pressure by increasing the supply of available rental properties to potentially not have as quick a price growth in rents. Now, I think the big takeaway for me around rental prices and soaring rental prices is to, one, try and secure long-term leases. If you can, secure a 18-month or 2-year lease. And two is always live within your means. Going back to the time when Emily and I were renters, we were paying only $320 a week for our very first apartment when we first got married. Now, that was a lot of money to us, but we were able to say, instead of renting a $420 a week property, which would have been much nicer, we were still able to afford a 2-bedroom apartment, but saving that $100 a week was $5,200 a year, and that was a massive amount of money for us. So if you can live within your means and rent a reasonable property, rather than paying for a luxurious or nicer place, that might be a great way to save your cash and not be stressed about rental price increases. Now, this can't always be avoided, and you might really want to live in an inner city location and therefore pay the premium for that. But you've got to find the balance between the right location and the right affordability for you and your family. It's not an easy thing to juggle, but Emily and I decided early on when we first got married, for our first few years when we were renting, to try and only pay between $300 to $400 a week in rent, live in small apartments, and save the rest of our money. It's up to each person whether they make those choices, so we'll have to see what happens with rental prices over 2022. Drop a like on this video, subscribe to the channel, leave a comment down below about your thoughts on rental prices and whether they're going to soar this year, and click this video over here for more things real estate, renovating, and financial freedom. I'll see you in the next video. Peace.